Hey, I'm Todd Walcott, and I want to talk about the one thing that stops more reverse conversations than anything else: the upfront mortgage insurance premium. 2% of your home's appraised value. I know that's a real number, it's real money, and you deserve a real answer about it. So let's put it on the table. On a $600,000 home, that's $12,000. I'm not going to pretend that isn't insignificant. What I'm going to do is tell you exactly what you're buying with it, because this isn't a fee that disappears into thin air. It's insurance, and it protects you in two very specific ways. First, if your loan balance ever grows to exceed what your home is worth, which can happen over time, your estate owes nothing beyond the value of the home, period. Your kids aren't on the hook, your savings aren't at risk, the FHA insurance absorbs that shortfall. And that's not a small thing. That's a guarantee most financial products simply don't offer. Second, if your lender ever becomes insolvent and goes out of business, HUD steps in and honors every term of your loan. Your line of credit stays intact, your monthly draws keep coming. You don't get caught in someone else's financial crisis. Now let me put that 2% into context, because I think that's where the conversation gets interesting. If you work with an investment advisor to manage your portfolio like I do, you're likely paying somewhere around 1% of your asset value every single year, year after year. On even a $600,000 portfolio, that's $6,000 a year, which means in just 2 years, you've paid more than the upfront insurance premium on a reverse mortgage. And that's before you've seen a single guaranteed protection. And that 1% is definitely a value. Or think about selling your home. When you eventually sell, whether it's in 5 years or 15, you're looking at roughly 6% in commissions and closing costs. On a $600,000 home, that's $36,000. The reverse mortgage insurance premium looks pretty different standing next to that number. Here's the principle I come back to again and again. Liquidity costs money. Anytime you unlock the value of an asset, whether it's your stock portfolio, your home, your retirement account, or grandma's silver, there's a cost to access it. The question isn't whether you'll pay something. The question is whether what you're paying is worth what you're getting. With the FHA upfront mortgage insurance premium, you're buying a non-recourse guarantee and federal insurance backing on what may be your largest asset. In my 40 years in this business, this could be one of the most defensible costs in mortgage lending. So the next time someone tells you that a reverse mortgage is too expensive, ask them this. Compared to what? Compared to the cost of selling? Compared to the cost of annual advisory fees? Compared to the peace of mind of knowing your family will never owe more than the home is worth? The elephant in the room isn't the cost. The elephant is that most people haven't seen it put in context. I'm Todd Walcott. I'm one of 206 nationally certified reverse mortgage professionals in the country, and I'd love to have this conversation with you directly. Give me a call, visit my website or my YouTube channel. The links are below. Because you've worked too hard for this home to let a misunderstood number stand between you and your financial security.